Hi everyone, Natu here again, back with another video. And in this video, I'm going to explain how to originate an opportunity for capital raising. So essentially originating, all I mean when I say originating is really when because there's a capital, there's getting the money to to fund the deal, and then there's obviously finding a deal to fund. And a lot of people that work with raises.com, they fall into several categories. Some people are the CEO or the founder of their own company, and they're just seeking capital for that venture. But many people we work with are working on multiple raises, multiple capital raises, so to speak, because yes, we're called raises.com, silly us, right? So because many people are raising capital for their opportunities, we actually really don't focus on origination at all, because it is part of our philosophy that origination is actually extremely easy relative to the capital raising portion of it. Hence why we focus all of our energy on assisting people in the capital raising part of it. Because it's our philosophy that when people know about what the buy side people want, then it can be much easier to know what how to reverse engineer it and just find a sell side deal that matches that mandate. So we focus all of our energy on the capital raising. So we actually never really talk about how to originate. In fact, we had one of the members from Australia actually join, and we told him that we guarantee that you'll be able to originate any company to capital raise for, because it's just that easy. And so let me explain how to actually do it. Really, there are just a few definitions and housekeeping just so I can communicate clearly. Really, the first part is understanding that origination, simply put, it's kind of like real estate. Is where you find an asset that is selling, or you find a company that is selling, and you simply contact people. You contact retired people, or you contact people that are tired of working on their business, and you see if they're selling their company. So if they're selling their company, simply put, the person would simply, quote unquote, put it under contract when they have the capital to be able to purchase it by leveraging a financial institution to raise the debt for it, or sometimes even getting equity and debt for it, or equity or some junior debts and some senior debts, depending on how the profits and how the revenue of the expired company is flowing. So this is what some people do. So it's simply put, it's kind of like, that's one way. And then another way is like if you're working on the opportunities as a consultant, because some people, they don't want to buy the companies. Some people, they just want to help them raise capital and as a consultant and get a percentage of the fees. So it's tricky to do this. Some people don't do this in the quote unquote compliant way. Some people do, and we're always about compliance on raises.com side. But it's our understanding that it's just treating, in both cases, it's simply lead generation. That's all it is. It's just prospecting and lead generation. It's simply put, you're getting a high volume of people. You're reaching out to a high volume of people who may resonate with something, either through manual outreach, one-by-one cold calls, or by getting an advertisement out, or by doing one-on-one emails, and then getting a quick discovery call, and then after that going towards a more long call, and then signing a contract. And after you sign that contract, then all you do really is go out and then find the capital to be able to fulfill on that contract. And so that's pretty much it. It's really just lead generation. And people have really made it into something that is magic and whatever, but it's really simple. It's really just going out to a group of people, sending them a message that may or may not resonate with them. And then based on the inquiries that you get back, finding the few that, it's like, yeah, I'm selling, and yes, my company is profitable and so on, and yes, my company meets this so-and-so qualifications, and then looking, getting a non-disclosure agreement, looking at the deals in the data room and all of that, seeing if it matches the buy-side criteria of the debt providers, or maybe even the equity providers that you've already partnered with or you already know, and then work on raising capital. So what's funny is that a lot of these people that work on doing this, they're in that stage where they already have all these deals, and then they're just raising the capital for it because either, the valuation, something went wrong there, or, it's really hard for them to actually close the deal and find the capital for it, or, there was not enough, assets there to, or there's not enough revenue there, and people waste even years, going in circles because they don't have a really strong idea of what the buy side really wants. And because of this, you have people that are really emotionally driven to make all these deals happen, but they don't have the fundamentals to execute. And so that's pretty much it. And simply put, so that's one, the types, so we've gone over one, really the types of reasons why people would quote unquote originate, and two, why people, how it actually works and why people may or may not get the results they want. And three, this is a new point, people actually come to us and then they say, oh, I'm looking for a deal in so-and-so sector. It's really easy for them to find them because all the people we're working with are already working on capital raising for their deals. So that's really not the hard part. It's really the hard part is really to find that buy-side mandate and then match make the deal with the buy-side mandate at the right time. So just keep it, and then really the solution here is really keep an open eye to the opportunity. Look at what investment banks, direct investors, direct lenders are doing to, for their due diligence, and then just copy exactly what they're doing and reverse engineer it for yourself, while also working with accountants and so on to do so. That's part of the reason why, sometimes we have funds that work on originating new opportunities, like real estate funds, for example, and then in actually, checking to see if the properties they have in a contract is quote unquote legit. What they'll do, they'll just work with CFAs. We help them with some CFAs so that they can look at the financials to validate all assumptions to see if it's something that's worth putting under contract and raising capital for. And post then really the end goal of all this is so that when somebody raises the capital for the deal, they get part ownership of it, and their investor, their lender, or whatever, they all get the monthly returns from the dividends, which either pays off a loan or fulfills on an equity investor's requirements and puts money in the acquirer's pocket, while the person who sold their business may work on the business for 6 months or so on, while the just to help manage the transfer of power, while the new owner sets up a team and puts the company in place, thereby doing this again and again to eventually either build a conglomerate or build a fund or build a roll-up, what have you. And so that's pretty much it. You can see how simple it all is. So really the magic is really understanding what the real buy side wants, how to actually get the capital for it, for people that are working on more creative deals that really don't fit within the context of a bank, because they're really stringent, and really it's just navigating all that, all the things that many people they aren't really familiar with, because entering M&A for the first time is like a new world, or people who are raising capital for multiple raises for the purpose of growing their business, using the strategies that investment banks, registered broker dealers, funds, and so on use. And so with this, I thank you for watching this video, and I'll see you in the next one.